Good morning, dear students. Today I am going to start Unit 7 Part B. Part A consists 6 units which are over, we have done. Now Part B includes 4 units. So today I am going to start Unit 7 Business Finance. What is business finance? Business finance means funds required in the business to carry out various business operations is called as business finance. Finance is required students at every stage of business. To run business smoothly, finance is required. Or you can say finance is the life and blood of business. Now, I will explain you importance of business finance. Importance of business finance I will explain you on two bases. First is fixed capital requirement and second is working capital requirement. So students, firstly I am discussing fixed capital requirements. Whenever we are going to start a business, we have to buy fixed assets like land and building, furniture, machinery. So to purchase all these kinds of fixed asset, the capital required is called as fixed capital. And a requirement of fixed capital is called as fixed capital requirement. This capital is invested in the business for the long time. Once it is invested in the business, it keep on invested for the long time. There are various sources to arrange fixed capital. Now, working capital requirement. Working capital is that capital which is invested in the business to meet daily expenses. So, the capital which is used to meet daily expenses, that capital is called as working capital and its requirement is called as working capital requirement. So, working capital is required to maintain cash balance in the business as well as to maintain bills receivable, debtors and to purchase current assets like raw material or goods, etc. Requirement of working capital depends on the nature of business as well as size of business and production cycle, or you can say credit allowed policy of the business. For example, there is a business which always involve in cash transactions. That business sells goods only on the cash basis. So that business will require less working capital because that business will have sufficient cash. They are selling their goods on cash. But if suppose there is one another business whose most of the transactions are done on credit basis, that business will require more working capital because that business most of the transactions are done on credit and they are having shortage of cash. In this way, working capital requirements based on different factors like size of business, scale of operations of the business, nature of business as well as credit allowed. In the same way, fixed capital requirement also depends on the size of business, nature of business. Suppose there is a manufacturing organization. Manufacturing organization will require more fixed capital as compared to the trading organization. Take one more example. There is a very large manufacturing organization like Tisco. They will be require more fixed capital as compared to a mini steel plant. So in this way, requirement of fixed capital as well as working capital depends on various factors. So students, now we can categorize sources of funds on two bases. So students, we can categorize sources of funds in two parts on the basis of ownership of capital. On the basis of ownership of capital, I am going to divide sources of funds. So students, on the basis of ownership of capital, we can divide sources of funds into two parts. One is owner's fund and second type is borrowed fund. Owner's fund are such funds which are invested by the owners of the business. For example, sole proprietor, partner or shareholder who are the owner of business, who are investing the capital. That capital is called as owner's capital. And borrowed fund, which are taken as a loan from any other party, that fund is called as borrowed fund. So let's make a difference between owner's fund and borrowed funds. So students, two types of capitals are owner's fund and borrowed funds. These two type of capital can be used to arrange fixed assets as well as working capital. So now have a difference between these two. First is on the basis of meaning I discussed with you, but again see the meaning of owner's fund. Owner's funds are such funds that are provided by the owners of an enterprise. Borrowed funds are such funds raised through loans or borrowings. Second is on the basis of sources. Students, there can be different sources of owners funds like equity shares, preference shares, retained earnings, GDR. GDR means Global Depository Receipts, ADR, American Depository Receipts, and IDR, Indian Depository Receipts. I will explain all these terms in detail in my next class. Next is, what are the sources of borrowed funds? Borrowed fund sources are debentures and bonds, loan from financial institutions, loans from commercial bank, public deposits, trade credit, and ICD, intercorporate deposits. Next is time period. Owners' funds are invested in the business for longer period, and once they are invested, they are not required to be refunded during the lifetime of the company. So they are invested for the life of the business. Borrowed fund. Such sources, borrowed funds, these funds are invested in the business for a specified period of time on certain terms and conditions. After a particular period of time, they are required to be refunded to the lender. Next difference is on the basis of returns. In case of owner's fund, business organizations have to pay dividend out of the profit remaining in the business after payment of tax. So students, whenever any shareholder is investing money in the business organization has to pay him dividend. This dividend is paid from the profits remains after the payment of tax. And if in any particular year company is not having any profit, then no dividend is paid. In case of borrowed fund, business organizations have to pay interest on the money taken as a loan, and this interest is very compulsory to be paid in every situation, even if company is having losses. Security. In case of owner's fund, it does not require any security. There is no need to put any collateral. In case of borrowed fund, there is a requirement of security. It is very compulsory to put collateral in case of borrowed funds. Then last basis of difference is control. In case of owner's fund, anyone who is investing the capital in the business, that person is the owner of business and he is having complete right to control the business. In case of borrowed funds, lender is not having any right to control the business organization. So students, these are the differences between owners funds and borrowed funds. Once again, I am going to tell you meaning of owners funds and borrowed funds. Owners funds are such funds which are invested by the owners of business organization. He can be sole proprietor, he can be any partner or shareholder. Examples are equity shares, preference shares. Borrowed funds are such funds which are taken as a loan or borrowings from other party. For example, debentures or loan from any financial institutions. So today's topic is very simple and interesting. I hope it is clear to all. Thanks. Have a nice day.